Good morning, I'm Chris Damassi. I'm co-founder and portfolio manager at Montaka Global, and it's a really exciting time to be back in front of you virtually at the ASX Investor Day. It's exciting because the dramatic drawdowns in global stocks this year have created some extraordinary opportunities to compound capital over time. So the market's completely underappreciating winning businesses that are transforming their markets and growing value exponentially. Their stocks have gone on sale. So we've backed several of them with high conviction, and we're going to be sticking with them because they'll be the multi-baggers over the long haul. And I'm going to share some of them with you in just a moment. But thanks to Montaka's work with ASX, investors can now take advantage of all the excellent opportunities that we're seeing because we have two funds listed on ASX. They're the Montaka Global Long Only Equities Fund with the ticker MOGL and Montaka Global Extension Fund with the ticker MKAX. And you can invest in both of them as easily as buying stocks on the ASX. But for now, let's take a look at one of the biggest paradigm shifts in history and how you can make money from it. Today, all around the world, enterprises are rapidly transforming their IT environments to take advantage of the benefits of cloud computing. And they're creating a multi-trillion-dollar market in the process. Remember, it was just a decade ago that almost every company in the world owned, ran, and managed all their IT by themselves on their premises. And that meant buying expensive servers and storage and networking equipment, and then undertaking long projects to set it all up, and then hiring highly paid professionals to install, manage, monitor, and maintain their applications. And of course, businesses always had to buy more IT than they needed to allow for the spikes in work levels. It was costly, inefficient, and highly prone to problems. But cloud computing has changed all of this. So with cloud computing, businesses can rent the IT infrastructure and platform software that they need from the public cloud companies like Amazon, Microsoft, and Google. Resources are easily accessed over the internet as soon as the customer needs them. There's no upfront investments. Instead, businesses pay as they go, but only for what they use. And they can scale up and down depending on what they need and when. And everything is then managed and kept up to date by a centralized team. So it's absolutely no wonder that enterprises are rushing to the cloud, but it's still early days and there's tremendous growth to come. You can see that compared to the adoption of other innovative computing platforms in recent decades, like PCs and smartphones, cloud computing is still in its infancy. While Amazon launched the first cloud computing service in 2006, the market only really got going in earnest in the last decade. And on many measures, just 20% of on-premise enterprise IT workloads have been converted over to public cloud so far. Yet even at this early stage of adoption, worldwide public cloud sales reached $180 billion last year. That's not far off the size of the global PC and smartphone markets already. But unlike these technologies that have since matured, cloud computing is growing at almost 50% year on year. We expect these sorts of extraordinary growth rates to continue as organizations convert more and more of their existing IT systems to the cloud. In fact, as this plays out, we see cloud computing expanding into an addressable market worth much more than $1 trillion a year by 2030. That'll be over 10 times growth in 10 years. But while these numbers are truly astounding, the idea of workloads shifting from corporate data centers over to public cloud platforms hasn't been completely missed by the analysts and the researchers. What is completely underappreciated, however, is the power of the artificial intelligence revolution to supercharge the market for cloud computing services. And that's because AI, where computers take over from humans, and machine learning, where the computers can learn and improve without any human intervention, will create a surge in demand for new and more intensive cloud workloads in three main ways. Firstly, enterprise application development is being democratized. So employees across businesses in every industry are building their own programs with embedded AI capabilities. More than 500 million new applications are projected to be developed between 2020 and 2023. Most of them are going to have AI. Secondly, we're on the cusp of an explosion in connected smart devices. It's called the Internet of Things. Devices like industrial plant sensors, autonomous vehicle cameras, even your own smartphone will collect 10 times more data in 2025 than they did last year to feed all of their AI models. And then thirdly, the computing power needed for training and inferencing these AI models has ballooned. Over the last half a century, the compute used to train AI systems doubled every 18 months to 2 years typically. Today, the largest models have over 1 trillion parameters, and the compute requirements are doubling every 3 to 4 months. It's blowing Moore's law out of the water. More AI-enabled apps, more devices and data feeding more intense AI models will add enormously to the demand for cloud services. And we think this means that the true size of the addressable market for cloud computing is being underestimated, and it's going to be multiples greater than many expect. In fact, we can see cloud becoming a $4 trillion market by 2030 when we add up the impact of AI. And what's even better for investors is that the long-term winners in the cloud are already known today. They are Amazon's AWS, Microsoft's Azure, and Alphabet's Google Cloud Platform. And while there may be many other AI and cloud companies with very lofty ambitions, these three hyperscalers are the surest way to win from this megatrend. Together, the hyperscalers already dominate their industry, and their lead is only going to grow over time. See, AWS, Azure, and Google control almost 2/3 of the global market for public cloud services. It reflects their virtually insurmountable advantages. For example, they each enjoyed customer captivity with the world's biggest companies and governments who rely on them for mission-critical cloud platforms and services. This turns the AI flywheel so that as customers adopt their best-in-class AI services, the better the AI becomes and the more essential the hyperscaler services are. It means that the winners keep on winning. The hyperscalers also have massive scale and innovation advantages. Their combined R&D budgets last year were $110 billion. It's about 4 times Australia's annual defence budget. These enormous investments simply can't be matched, and they'll ensure that the hyperscalers won't be caught. And better still, the stock prices of Amazon, Microsoft, and Alphabet have all pulled back this year at the same time as their cloud businesses have kept growing strongly. And that gives us a really attractive entry point today to own these businesses as they compound value exponentially into the future. Each of Amazon, Microsoft, and Alphabet are top holdings in both our Mogul and MCAX funds. And investors can access both funds on ASX through a broker or share trading account on any ASX trading day. So I hope to welcome you as an investor with Montica very, very soon. But for now, I hope you enjoy the rest of your day with ASX. Thank you.